Joining me now live to discuss this and much more via Skype, I have Olusegun Elemo, Public Finance and Policy Analyst. Good to have you on the Breakfast Show this morning, Olusegun. Now, Olusegun, let's have your first reaction to the downward movement we've seen in terms of the external reserves. It's been quite a little bit of a worry despite the initiatives from the Central Bank of Nigeria, looking at efforts towards increased diaspora remittances, Naira for Dollar initiative, and much more. But analysts still say we are playing still at a fair enough level. We wouldn't hit as bad as $30 billion, which is the biggest worry for so many analysts. Your thoughts?
Yeah, thank you for that question. I'm happy that the central bank governor, already put out some of the reasons why we're having this downward trend with regards to the external reserve. Frankly speaking, there's been lots of pressure on the external reserve, like you mentioned. There's this Naira for Dollar initiative of the central bank, and then you can also see the instability in the FX market that has now warranted intervention by the central bank. And I think that these are some of the situations that has now put the foreign reserve on the edge. And yes, the monetary policy players, monetary policy makers must intervene on these issues, particularly when you see a situation where the Naira is, depreciating on a daily basis. The central bank must rise up to the occasion. I think that's what is responsible for the depletion of the foreign reserve. But to further contextualize it, is that between April 16th and June 1st, is that about $1 billion, had gone out from the reserve, and that if we then continue in this trajectory, it then means that going to deplete the foreign reserve. For me, is that when we look at what happened in 1999, when we had the transition to democracy, the reserve was just about $4.9 billion. By 2008, as at the time when the former President Olusegun Obasanjo was handing over to late President Yar'Adua, he had grown the reserve to about $54 billion. But you see a downward spike in 2016 when President Buhari was taking over. The reserve had come down to $23 billion. Now we've had an opportunity to then grow again to about $34, $35, $36 billion. But the government of the day had always complained about the low price of crude oil and all that. And now that we have crude oil price hovering around $68, $70 per barrel, I think that it is time for us to then be intentional about growing the reserve, because the reserve itself, managed by the monetary policy institution, which is the central bank, is very, very important to what happens in the foreign exchange market. And I think that we must focus on that and limit what we're spending in terms of, for instance, even though we're having crude oil price at $68 and looking at hitting $70 per barrel, we are also spending about 103 billion naira monthly to subsidize premium auto spirit. And I think all of that will continue to put the reserve on the edge. So we need to look at that.
I like the fact that you're bringing in focus that oil remains a major revenue earner in terms of foreign exchange. But at the end of the day, looking at the fact that we are not having our refineries produce, it's about 19 months back to back of not having any production of oil at all, despite the cuts from OPEC as well. That has been one of the biggest concerns for economists like yourself. January this year, we didn't have any output, no crude was pumped out. Looking at also the month of February, it's still yet to have reports for March, April and May. Likely, this will be the trend that we would also have in terms of the reportage. How worrisome is it that we are not even having our best foot forward in terms of production, the state of our refineries, since oil still remains our major revenue earner in terms of foreign exchange, and we're yet to diversify to have a bigger base to attract as much foreign exchange as possible?
You see, it's, well, in terms of how worrisome it is very worrisome. It is very worrisome because when you're having just one stream of FX income, and then you have multiple streams of FX expenditure, I think we really need to look at that. And one way to address what's happening in the downstream sector, for instance, or in the oil sector generally, is to just deregulate that sector once and for all. Deregulate it, yes, there will be that temporal pressure on the people. But it is that, for instance, now, I mean, the stakeholders are saying that we're spending, I mean, we're consuming as much as 93 million liters per day. It is absolutely impossible. It is impossible for Nigerians to consume 93 million liters per day. And that is what subsidy is calculated on. Mind you, there is no provision for subsidy in the 2021 budget. So these are extra budgetary spending on its own. And I believe that, you know, the National Assembly should look at this, because this is actually gulping lots of, you know, the forex income that we're getting. Another side to what we are seeing right now with regards to FX pressure that is now, you know, giving us the indication with the foreign reserve that we're experiencing right now is that there's been lots of capital outflow. You see lots of companies, lots of corporations now leaving the country. In fact, there is investment diversion. That's what I call it, because lots of the investment that should ordinarily come into Nigeria, look at what's happened with Twitter, you know, setting up its office in Ghana, and not just Twitter, many corporations, you know, now going to other African countries. Why? Because there is no enabling environment here, and that means that we're losing lots of, capital inflows that should have ordinarily helped to augment our foreign exchange earnings. Also, is that there is the domestic inflation. In 2015, for instance, inflation was at 9%, but in just between 2015 and 2016, it grew to 15.7%. And by 2019, it had come down to 11.4%. But look at what happened in 2021, as at April, you know, inflation had risen to 18.1%. All of these will continue to put pressure, you know, on the FX market, and by extension, the external reserve. And then when you also look at what has happened with the country's income, I mentioned about oil, but we're spending lots on subsidy as well. And then the monetary policy authority and the fiscal policy authority, they also need to look at those policies, whether they have been expansionary in themselves. For instance, you know, the access to credit, yeah, there's been some access to credit, but the consumer spending as well as a result of inflation is also there. All of these things will continue to put pressure on the FX market, and by extension the external reserve. So we need to tidy up all of it. And mind you, we're an import-dependent economy. So we need to address a whole lot of it. But first and foremost is that we need to look at what's happening with subsidy payment.
And another issue is the fact that generally on the global front, the conversation about cost-cutting measures, that's the way to go now. But looking at that, Nigeria needs an aggressive level of investment in terms of other sectors of the economy, manufacturing, agriculture, processing units. The value chain is vast and it is capital intensive. Government's budgetary allocation cannot support this. Borrowings cannot support this. Hence, the fixation on oil will continue. And we're also putting our best foot forward. How do you think the government can meander through this challenge at this point in time?
What I think we need to do, those in government, the fiscal policy authorities and the monetary policy authority, yes, I know CBN is doing, quite, a bit in that regard, providing credit. But it's not just credit. We need to look at the environment generally. It appears that, businesses, aren't surviving here with the environment that we are creating, and we need to improve investors' confidence. As you mentioned, borrowing will not solve it, as we see right now. For instance, look at what foreign debt is like. In 2015, December, foreign debt was around $10.7 billion. By 2019 December, foreign debt had risen to $27.6 billion. As at now, by December 2020, foreign debt had risen to $33.3 billion. And it's not translating to improved environment in terms of activities, economic activities. Yes, there is investment in infrastructure, but we need to scale that up. And the railway alone will not solve it. We need to look at what's happening with power, and we need to provide the enabling environment and improve investors' confidence. Look at what's happening with security. Nobody will bring money here with the nature of security. You can't literally travel a stretch of road without having the fear of being kidnapped. In fact, as a matter of fact, every day children and school children are being kidnapped in every part of the country. Look at what happened in Oyo State over the weekend. Look at what's happening in the southeast. Look at what's happening in the northwest. Nobody's going to bring money here when we are having this sort. Government needs to address all of that.
Thank you very much for your time on the Breakfast Show this morning. Definitely, the body language of government has to change towards the insecurity situation in the country and other socio-economic challenges. Enough is enough, and it's time to take action. Thank you very much once again, Olusegun Elemo. It's been a pleasure.
Thank you for having me.